Let's take a look at some information and charts on Tezos for Brave New Coin. So much like EOS, Tezos is a proof of stake network, although Tezos has the governance component under control probably to a better degree than EOS does. It still sits in the backseat compared to ETH, just like EOS does. I think a lot of these proof of stake coins will need to continue to innovate to compete, because unless DeFi jumps on board most of these chains, they kind of don't stand a chance because everyone is at the ETH party. But I like Tezos from a upgradable governance perspective. They've done that extremely seamlessly over the past couple of years since the coin established a main net. Just like EOS, we got to look at the market cap, 2.2 billion, according to BNC. And the Tezos Foundation currently holds 965 million. So not as bad as a discrepancy compared to EOS, which has a treasury 2x the actual coin. But much like EOS, at some point, the Tezos Foundation should probably continue to step on the pedal a little harder for development and ecosystem functionality. Use some of those dollars, put those dollars to work. Not that they aren't already doing so, but that's definitely something you want to see out of your foundation, whether it be Zcash or whoever. Put those dollars to work for the coin. If we look at all the bakers, much like EOS or any masternode type of chain, it takes 8,000 Tezos to stake, and then they need to maintain a bond that's 10% of the total balance in order to get full rewards for the staking. And if we look at the top three, all three are exchanges. So that's the top 25%. And this is kind of always going to be the case for proof of stake, which is a perpetual centralization issue or potential centralization issue. Just by convenience, you're going to see a lot of people staking on exchanges, right? So 25% is exchanges, and then a lot of it is foundation bakeries as well. And especially if the foundation is getting staking rewards, you want to see those rewards being put back into the ecosystem. And according to staking rewards, rewards after inflation is less than 1%, which is less than what you're getting for USDC. And this is another perpetual problem for proof of stake. Why would you hold a volatile asset which hasn't gained value against BTC or ETH for years when you can just hold USDC for 5% or whatever it is on any various DeFi platform on ETH? It kind of makes masternodes and the idea of proof of stake for anything else kind of silly unless you are extremely sure that this stuff will have a bull run eventually relative to BTC, ETH, or even USD. Here are all the proposals they've done over the past few years, and you can dig deeper into all of these. And the votes are clean, and the proposals are clean as far as what goes live on mainnet. I don't really have too much to say about it. Governance kind of isn't that big of a deal until there's a big dispute. Then all of a sudden governance is super important. Look at the block size debate, look at ETH gas ceiling, look at ETH 2.0. All these things are very important to the fundamentals of the chain. So it definitely matters how this stuff is implemented. Transaction counts in the line here have increased, and I think this is their DEX or some DEX activity, DEX-like activity, because you see transaction counts doubling and average transaction values in the fill falling off substantially. So this probably represents a bunch of extremely small transactions, bringing that average down to less than $1,000. And transaction counts continue to hold kind of at those highs. If we look at NVT in the line here, continues to decline, which is bullish. Active addresses continue to increase, also bullish. Although this is a proof of stake coin, so you're going to see on-chain rewards, staking rewards in here. If I turn off the averages, this thing looks very strange for all of the coins I've looked at. These active address counts kind of nothing but rewards from staking, it looks like. Or the movements are just staking rewards. But if we turn the averages back on, it makes a little more sense. Kind of plateaued, so nothing too crazy there. But I don't think either of these are going to save you at the end of the day against BTC or ETH. There are some dApps on Tezos that I don't really hear anything about ever, generally. You know, maybe I'm just in the wrong circles, but they do have a stablecoin, they have NFTs, they have a DEX or a swap. So they have stuff and things that they're trying to do. And if we look at the list on dApp Radar by volume, looks like 4 of these break 1 million on 30-day volume. And compared to ETH, again, that's nothing. And you have to compare the two because they're both effectively trying for the same market share, especially when ETH goes proof of stake. And here's the exchange at the top here, the swap. And it looks like slowly users are creeping up, but again, nothing crazy, right? This is very muted activity in general, but it's not there. So they're trying to do something at the very least. If you look at Google Trends for Tezos, basically flat since kind of May 2020, peaks and troughs and such, but nothing crazy. And it kind of makes sense when you look at price, not a lot of just activity in general since May, like everything else in crypto. Moving to technicals, 5200, yearly pivots, VPVR, volume, RSI. Volume has kind of fallen off a cliff here on Kraken. Price has survived certain death off a cliff from 220 to 120, which is basically these volume nodes here. Anything lower, and certainly this would have tested some multi-year support based on volume. It's back above the yearly pivot. It's back above these VPVR levels. And RSI is finally broke 50 for the first time since May. Still a bear cross on this 5200. So if anything, again, across the board, this is more mean reversion than here we have a bull trend again. You know, mean reversion for Tezos to the 200-day moving average would be 360. If we look at it on the daily cloud, potential mean reversion to 515, which would be this cloud level here. This may take 2 months to play out, but it looks like it's well on its way towards an attempt. You know, this is a probability game. As things break into the cloud, you can get more certain that it's going to reach for this $5 target. Basically, Eiffel Towered the entire January run up all the way down. And if you're waiting for confirmation, you're waiting for this 12-hour cloud to flip bullish. You're waiting for price above 12-hour cloud. This also has a potential diagonal inverted head and shoulders, much like a lot of crypto does right now. So if everything moves up like it probably will, Tezos as well will move up. I don't know if it'll move to 515, but it'd be something I'd be watching for if I was trading it. And you can get more certain this will do something bullish once we break 310. Against BTC, it's consolidated down in this area for a considerable amount of time now, 220 days. The 5200 is still bearish. There's really no pivot support down here, and it's below VPVR resistance at 11k sats. Volume on Bitfinex basically zero. RSI still pointing down, and well past its historic consolidations down here. So it doesn't look bullish in any regard. You know, basically you'd want to see it above 11k sats again. You'd want to see a bullish 5200 cross, and then maybe it would move to 18 to 21k sats based on the pivot, based on VPVR. But this does not look like anything I want to touch at the moment. And Tezos ETH, it looks even worse. Ever since mid-2020, it's just been down only. There's a growing bull div with pretty crazy volumes at this level, but I don't know if that's enough to save it. Fundamentals just don't make any sense to hold Tezos over ETH if you're completely, purely objective about it. ETH is beating the pants off of anything else that's trying to be ETH, and the price charts reflect that. So that's all I have for this one. Like, dislike, comment, share, subscribe. Check us out on enzyme.finance, and happy trading.